You may have heard interest rates on mortgages have gone up. So, the most common question that we keep getting in our business is whether it makes sense for someone to continue to rent and wait for the market to have a correction or buy now. And my response is always, well, it depends. Or what I like to look at today is one example of someone that is currently renting and looking at a comparable property that's selling. We'll take a look at two properties here. This one on the right is currently renting, or it rented for 5,600. This is in the Pembroke Pines area. It is a 3-2. Now we look at a comparable property that's for sale for 530,000. And now this property it's also a 3-2, about 1,700 square feet. It's in the same area. This is a comparable sale to the rental property. So now what I'd like to look at is whether it makes sense for someone that's renting a property like the one on the right hand here for 5,600. And let me just show you a couple of pictures. I mean, it's a standard property. It's not like it's not like it's completely remodeled. It's not, it's very standard, basic property in Pembroke Pines, and it's rented for 5,600. Now, the question is, someone is able to buy a comparable property. Does it make sense for someone to buy it, or should they wait for the market to correct itself? This example, so we're looking at a 530,000 purchase price, 5% down. We have a loan amount of 503,500 and an interest rate of 6.75 APR. This is an estimate. The interest rate can change. It depends on someone's credit score, down payment, type of property, etc. This interest rate here is only for our the purpose of our exercise here. It is not meant to be a real representation of what your interest rate. We're looking at a 30-year mortgage and estimating property taxes of 5,300 for the year, a private mortgage insurance of 0.25. This is issued by the banks anytime that a buyer gives less than 20% down on their purchase. So I am assuming that this person is giving minimum required, just 5% down, first-time home buyer, and a homeowner's insurance policy of 2,700 for the year. So now when we look at the monthly payment, you're looking at 4,037, including your taxes, insurance, mortgage insurance. And here you have a significant difference from what you would be paying as a homeowner versus if that same person rented this property at 5,600. If you can find a 3-2 in Pembroke Pines for $4,000, you might as well just own it, right? It gives you stability. You're building wealth over time. Rents is just something that you're paying your rent. You're never going to get those rental payments back. So when determining whether you should buy or rent, this is one exercise that I do with my clients. It's worth looking at what their current rental situation is, and if they're going to continue to rent, does it make sense for you to buy a comparable property rather than just wait for the market to correct itself? Now, if you think there will be a market correction down the line, it is worth mentioning or at least looking at the possibilities of how the market or the rental market will react to a decrease in property values. If property values decline, if you think they're going to decline, and less buyers are in the market, meaning that you take those qualified buyers, you turn them into qualified tenants. So now less buyers, more tenants, it's going to drive up the demand for rents. So you're going to be dealing with an increase in demand in the rental market, which essentially will or may drive up rental prices. So whether it makes sense for you to wait or not, it really depends on your personal situation. This is one good exercise that you can do on your own just to kind of see if it would make sense for you to buy or rent. I hope this exercise helped. Good luck out there. If you have any questions, don't hesitate to reach out to us. Until next time, stay safe.